Hey, welcome back to the show. Today we are diving into Deepak Nitrite's Q3 and 9-month FY25 results. And speaking of diving, their stock took a serious plunge today, down over 15% to a low of 1,872.3 rupees. Seems like the market really wasn't happy with the Q3 earnings released yesterday. So,
Absolutely. That's a pretty brutal drop. Deepak Nitrite, or DNL as they're known, is a significant player in the chemical intermediates game. You know, the stuff that goes into making all sorts of things we use every day. They've got a presence in a bunch of different industries, from agrochemicals to pharmaceuticals, even dyes and pigments. Disclaimer, we advise investors to check with certified experts before taking any investment decisions. It is always good to check with the experts. And clearly, investors are reacting to something significant today.
exactly. They're calling themselves a responsible manufacturer, which sounds good, but as that stock price shows, the numbers this quarter aren't quite reflecting that rosy picture. So, what exactly do they do and where are they doing it?
Well, they've got a sustainable business model that includes 7 modern manufacturing facilities in 5 strategic locations. Plus, their products are exported to over 45 countries across 6 continents. They're also the largest producer of phenol, acetone, IPA, and sodium nitrite in India, which is quite a feat. Think of it like this: if India needs it, chances are Deepak Nitrite is making it. And they've got a strong workforce of 5,000 people and over 1,000 customers.
Wow, impressive. And it looks like they've been racking up some awards too, right? Rasayan Udyog Ratna and some ICMAI awards, it says here.
Yep, Shri Deepak C. Mehta even got the Rasayan Udyog Ratna Award, and Sanja Pudhai and Somstikhar Nanda were felicitated for leadership and excellence.
Okay, awards are nice, but let's get to the nitty-gritty, the financials. What's the headline for this quarter? Because a 15% stock drop suggests it's not good news.
Well, hold on to your hat, because Q3 wasn't exactly a banner quarter. The report mentions a perfect storm of factors hitting their operating performance. Plants were idled, agrochemical intermediates were slow to recover, raw material prices were high, and there was oversupply from China. This perfect storm is likely what spooked the market so badly.
Out. A perfect storm, huh? So everything that could go wrong did go wrong? Let's break that down a bit. How did this affect their key numbers?
Total income for 9M FY25 was 6,163 crore rupees and EBITDA was 836 crore rupees. In Q3, total income was 1,924 crore rupees, which is a 5% year-on-year decrease. EBITDA took a bigger hit, down 40% year-on-year to 190 crore rupees. PBT, or profit before tax, also dropped significantly, down 51% year-on-year. So basically a mixed bag, but with more bad news than good this quarter, and the market clearly focused on the bad news.
Ouch. Okay, that's rough and explains that stock price tumble. What about revenue mix? I see something about domestic versus exports.
For the first 9 months, it was about 84% domestic and 16% exports. So still a pretty heavy reliance on the Indian market.
Got it. Now, I see some mentions of specific segments like dyes and pigments, agrochemicals, and phenolics. How did each of those fare?
Okay, so the dyes and pigments intermediates were relatively resilient, maintaining a strong market share. However, even they saw margin contraction due to transient feedstock price increases. Agrochemical plants were idled due to customer destocking, but they're expecting a volume pick up soon. And Phenolics margins were compressed due to firm input prices and a planned shutdown.
Shutdowns are never good, right? So they're blaming temporary issues for the margin compressions and expect expansion in dyes and pigment.
That's the key. The company believes margins will expand in the dyes and pigment sector and that the worst is behind them. So Q4 should be more promising. They're trying to paint a picture of a temporary setback, but the market's reaction today suggests investors are skeptical.
Okay, so maybe not all doom and gloom. What about these new projects they're working on?
Yes, they've got several projects in the pipeline. A nitric acid project is expected to be commissioned soon. There's also an MIBK/MIBC project expected by H1 FY26 and an acetophenone project also by H1 FY26. Plus, they're building a new R&D center in Savli, Vadodara.
Okay, so investing in the future. It's like they're planting seeds now for a future harvest, right? It is also good to remember, to like and subscribe to the YouTube channel.
Precisely. It's all about long-term growth. In fact, the CMD, Mr. Deepak C. Mehta, mentioned that new products like nitric acid and MIBK/MIBC should be coming online soon. He also highlighted their long-term plan for the polymer business, including acquiring German assets for polycarbonate resins.
Polycarbonate resins? That sounds fancy. What are those used for?
Oh, they're used in everything from electronic components to automotive parts. India imports a ton of it, so Deepak Nitrite is aiming to produce a significant chunk of that domestically. They're planning to produce about 160 KTA in the first phase, with all projects targeted to be completed by the end of FY 2028.
Okay, so big plans for expansion and import substitution. That could be a game changer. Let's look at those financials again, focusing on the segments. What's the revenue and EBIT breakdown?
For Q3 FY25, Advanced Intermediates brought in 552 crore rupees in revenue, while Phenolics contributed 1,366 crore rupees. However, EBIT for Advanced Intermediates was only 17 crore rupees, compared to 121 crore rupees for Phenolics. So Phenolics is definitely the stronger performer right now.
Got it. Phenolics is pulling the weight. What's their outlook for the future? Are they just hoping things will get better? Or do they have a plan?
They are cautiously optimistic. They expect demand patterns to normalize and are already seeing improved demand from international customers. They anticipate margin expansion as raw material prices ease. Plus, they believe India's manufacturing shift, supported by favorable policies, will drive significant growth opportunities.
Okay, so they're betting on a recovery in demand, easing raw material prices, and government support for manufacturing. All right, auditors reviewed and approved the results with no modifications. That sounds good.
Yep, the auditor's review reports state that the review was conducted in accordance with the standards.
So wrapping things up, what's the bottom line here? Is Deepak Nitrite a buy, hold, or sell based on these results? Obviously, the market today is leaning towards sell.
Well, it's a bit complicated. Q3 was definitely a tough quarter, and the market's reaction is understandable, but they have a diversified portfolio, are investing in new projects, and expect a recovery in the near future. It really hinges on whether those expectations materialize. The company has commissioned 4 new products during Q3 with orders in hand. Cost improvement initiatives and debottlenecking activities are expected to further improve performance. Whether that's enough to regain investor confidence remains to be seen.
So a bit of a mixed bag right now, with potential for improvement, but a lot of investor skepticism to overcome, judging by today's stock performance. It is interesting. Thanks for breaking down those complex financials for us.